So in our last video, we talked about automobile insurance rates. Today we're going to talk more about homeowners insurance rates. And this also goes to condominium, renters insurance. You're going to see increases in your annual premiums going through the roof. In the article, you see here that they're talking about 50% premium increases. Some are even higher than that. So if you have a homeowner's policy, a condo policy, a renter's policy, you're going to see your rates go through the roof, even if you haven't already seen them. Automotive rates, car insurance rates have done the same thing. So what do you do if you are a personal lines insurance client? That's what these policies are called, personal lines, automotive, homeowners, condo. And your rates are going up. Well, the one thing you don't want to do is to go uninsured. Even if you own your home or car for cash, you could maybe not have insurance, but you don't want to do that because everything you've saved up for to buy that house or car is at risk if you have no insurance. But what you can do to lower your insurance rates is to make a couple changes to your policy. And if you need more information, you can click our website, riskcoverage.com. You can also consult with a live insurance agent, insurance broker, licensed broker, to get a second opinion. We won't sell you homeowners insurance. We won't sell you car insurance. We're not in that business. We only do commercial insurance. But those brokers can give you advice on what to do with your policies to lower your rates with your existing carrier, or maybe shop around for another carrier. So here's what you do. First, look at raising your deductible. If you have a $200 or $500 deductible, look at $1,000 or $2,000. On your homeowners, maybe even $5,000 deductible. So if something happens to your home, the first $5,000 you pay out of pocket. It's almost like going without insurance except for something catastrophic. Remember, you're on the hook for that first part of the claim. So make sure you have the cash and the capital to be able to handle that. You don't want a $3,000 claim to bankrupt you, right? The second thing you want to do is to look at all of your limits. You don't want to necessarily lower your limits, but you want to make sure they're in line with what your exposure would be. Also, if you want to have more coverage for catastrophic, you can get an umbrella policy. A lot of times, if you go from, let's say, a $500 deductible to a $5,000 deductible, your insurance rates will go down tremendously, maybe $1,000 a year. You might be able to add on an umbrella policy that takes your upper limit from, let's say, $1 million to $2 million for maybe $400 a year. So you're saving money and still getting more coverage. The key is to match your coverage to really what your risk profile is. You're probably not worried about the $500,000, $2,000 things that could happen to your house. You're worried about the big things, right? Make your insurance match what your finances are. Also, no matter what deductible you have, don't file a claim unless it is going to affect your personal financial security. Even if you have a $5,000 deductible and you have an $8,000 claim, remember, you're only going to be getting $3,000 if you file that claim. You have an $8,000 claim, the first $5,000 you take care of, $3,000 you'll get from the insurance company. It's almost certain that your rates are going to go up. And that $3,000 you'll pay back over the next 2 or 3 years. So unless it's crucial to your finances, you're out of money, don't file claims unless you absolutely have to. Even if it's a $10,000 claim, think twice about filing the claim. Many homeowners are going to find over the next few years that they will get non-renewed. That's the insurance company's way of saying canceled. Or they're going to not be able to have coverage, or their insurance carrier is going to jack up their rates, or they might even do something like have higher underwriting, make you have a new roof, make you have a new wood stove. Make yourself look appealing to the insurance companies. Look, the reason for this is not necessarily greed. Yeah, they make money, but they're getting hit with so many claims, and these claims are going through the roof in terms of how expensive they are. Inflation, supply chain issues, replacement cost of items is so much higher, and you have more catastrophic events. Hurricanes, fires, tornadoes are wiping out whole subdivisions. the insurance companies have had more claims losses in the last 3 years than they've had in decades. So they're looking to try to make sure that they have enough money to pay claims. They have to raise your rates. Match your policy to what your finances are. We can get more details on this in your particular scenario. Click the link below at riskcoverage.com to get insurance consultation.